is going to attract capital, then it must encourage a free and fair market.
Well, that's actually one of the biggest fears here in the market as well. And a lot of people would argue that one of the reasons why the floor of the stock exchange has not been removed is so as to maintain the capital for foreign exchange reserves, and they are apparently waiting for some FX flows to come in, after which they would open that floor. Now, when that floor does open, as I said, and you had just mentioned that your long-term view on the fundamentals of Pakistan is the same, but you and other fund managers are clearly upset with the market measures. When the market does open, what's your first reaction going to be?
Well, I think the first reaction, of course, will be to look at what the valuations are, compare them to other markets, and make decisions based on that. You must remember, we are in a global environment, and every day we are comparing companies in Pakistan with companies in South Africa, or companies in Brazil or China or wherever. So it will all depend on what those valuations look like. I must say that it will take time for investors to regain confidence, because they will always be afraid that the measures to open the market will be reversed again and the market will be closed. So I think it's important for the authorities and the stock exchange to reassure investors that there will be, a consistent long-range policy for the market. Now, it is true that foreign exchange is important, and the foreign reserves of the country are critical in this regard, because if investors want to move money out of Pakistan, then they must consider their ability to get US dollars or to get euros or whatever currency. So combining an opening of the market with a opening of the foreign exchange system will be quite critical. You can't have one without the other. Now, as you know, some countries do put limitations. For example, in some countries they will say, look, if you bring in 100 million, you can take out 100 million, you must register, and you can take out 100 million plus whatever profits you may have made. And there's a record kept, that's fine, but no problem with that. But unless you give assurances for investors in their ability to get money out, then it's not very attractive. And of course, in some cases, it would be considered even dangerous if you're running open-ended funds.
Another question, obviously that's a very strong point that you make, that if free flow of foreign exchange is not allowed, then that does generate a level of discomfort from the perspective of the foreign investor to come in and knowing that they may not be able to get out when they want to. There's a question from the floor, and it says, how beneficial are the funds invested in emerging markets such as ours? Because when the going is good, the money is pouring in, and as soon as things get a little tightened up, a lot of the emerging market investors, fund managers, want to exit right away. So, do emerging market funds really contribute in the long term towards sustainable investment in emerging markets, or should they be considered not exactly fly-by-night operators, but in that regard?
Well, you must remember the purpose of having a capital market, a stock exchange, a bond exchange, etc. The primary purpose is to raise capital for investment. When people invest in stocks, they are assisting the raising of capital, because when you have an IPO, an initial public offering, you're raising money for companies to invest. That money is tied up. It cannot go anywhere. Investors cannot get their money out immediately if a company is invested in a factory or in office buildings or whatever they're investing in. So that's very, very important. Now, why do we have a market? We have a market because it enables those people who supply capital, new money, for investment in Pakistan. It enables them to liquefy that investment, enables them to get out, and enables other people to get in if they like the investment that was originally made. It allows them to get in. So there's no question that any investor, whether he be a foreigner or a local, investing in the stock market helps the country raise capital. Because if there's a new IPO, one of the first and prime considerations of investors will be their ability to liquefy that investment when and if they would like to do so. So there should be no question as to, whether someone is fly-by-night or whatever, because the local investor and the foreign investor really don't behave any differently. They have the same mentality. They, of course, have an objective of making money. They believe that by buying stocks, the company who has their capital will invest wisely and increase the value of that capital, and they hope that sometime in the future they will be able to get out with profit. Now, in many cases, as what is the case now, they are probably taking losses. If they sell now, they are, in a position where they are taking losses, and whoever buys the stock from them has the potential to make a big profit. So I think you have to look at it not from the point of view of, whether someone is short-term or long-term or what their intentions are. You have to look at it from the point of view of what the original purpose of the capital raising is and what impact it has on the economy. I would submit that a vibrant and active and liquid stock market enhances the country and enhances the ability of companies to raise capital. And of course, if you can raise capital, then you have the chance of raising the standard of living and increasing the wealth of the country. Because you cannot have economic growth and productivity without capital. Now that's something that is just critical and very, very important.
Absolutely. Another question. Obviously, if you look at the investor sentiment right now, investors all over the world are running towards picking up US Treasury bills. Now, if you look at the GDP growth forecast that most of the economists are putting forth, we can already see that most of North America and Europe now and North America is entering a phase of recession, whereas the only hope for economic growth across the world is now remaining in the emerging economies. Some economists are saying that emerging markets may still continue to grow at about 5%, whereas America and Europe may run into recession for a short while. So for the coming years, can emerging markets become the primary